Are you struggling to pass the CPA exam because your course failed to fit your learning style? I'm Darius Clark of I-75 CPA Review, where the right teacher makes all the difference. And today, we're going to look at the 4 must-know partnership tax questions for the CPA REG exam. You ready? All right, during March, Claire and Jen contribute cash equally to form the CJ partnership. Claire and Jen share profits and losses of the CJ partnership 75% and 25% respectively. So 3/4, 1/4, with Claire being the bigger partner. Is that important? Yes. Now the CJ partnership's ordinary income was $60,000. And you're probably thinking 75% to Claire, 25% to Jen, and you're on the right track. All of a sudden it says a distribution of $5,000 was made to Claire. No distribution was made to Jen. What is Claire's share of taxable income from CJ partnership? So they're asking about Claire, they're not asking about Jen. And we know Claire is going to be taxed on 75% of this ordinary income of $60,000, which adds up to $45,000. So is letter A the right answer? What about this distribution of $5,000 made to Claire? Is that cash distribution to Claire going to increase Claire's taxable income? And the answer is no, for a very important reason. Claire's going to be taxed on the ordinary income, which is 75% of the $60,000. Claire's going to be taxed on $45,000 of partnership income. If you were to tax the $5,000 distribution, that would result in double taxation to Claire. Why? Well, the theory is that Claire's only getting this $5,000 distribution because the partnership earned profits. So they earned profits of $60,000. Claire's share is $45,000. Claire is taxed on $45,000. Whether she gets a distribution or not, she's going to be taxed on $45,000. If she's taxed on this $5,000 distribution, she'll be paying double tax on this $5,000. And that's a very important note to take, that when you're taking the CPA REG exam and you get a question on partnership tax, there's no double taxation with regard to partnership income. This income is not taxed to the partnership at all. It's only being passed through to the partners, and the partners will pay tax on their share. Claire's share of the $60,000 is $45,000. Whether she gets a distribution or not, she's taxed on $45,000. What if she got a $40,000 distribution instead of a $5,000 distribution? She'd still only be taxed on $45,000. Why? Because to tax the distribution would result in double taxation. What does happen to this $5,000 distribution is it will reduce Claire's basis in the partnership, but it will not result in double taxation. Let's try this partnership question. Marty and Walter are equal partners in a boardwalk arcade business. The partnership earned $150,000 profit. Which of the following is correct? 1. Each partner would be taxed on $75,000 unless they did not receive any profit distribution during the year. And we know that's false now because in the previous question we said that if you're a partner, you're going to be taxed on the ordinary income of the partnership regardless of whether you got a profit distribution. So let's read Roman numeral 1 again. Each partner will be taxed on $75,000 unless they did not receive any profit distribution. Wrong. Each partner is going to be taxed on $75,000 regardless of whether they received a profit distribution. Roman numeral 2, each partner would receive a basis increase of $75,000 for the income earned by the partnership. B is the answer because Roman numeral 2 is correct. If the partnership earned $150,000 profit, then both equal partners would receive a basis increase of $75,000 for the income earned. Partner basis increases for all income earned. Let's try this one. Fred and Kathy each own 50% of Tech Partnership. The partnership earned $10,000 in ordinary income and $1,000 in tax-free interest income. Kathy's basis will increase by what? Well, we said in the previous question that all items of income earned by the partnership will increase partner basis. Here the partnership earned $11,000. Kathy owns 50%. So her basis is going to increase by $5,500, which is answer choice D. Make a note of this for the CPA reg exam. Partner basis will increase from all income earned by the partnership, whether that income is taxable or not. So here each partner's basis will increase by $5,500. Now they didn't ask what was taxable here, did they? All right, similar facts. Fred and Kathy each own 50% of Tech Partnership. The partnership earned $10,000 in ordinary income and $1,000 in tax-free interest income. Here's the new part. Kathy received a distribution of $600 and will be taxed on. So take a look at this. What is Kathy going to be taxed on here? There's ordinary income, there's tax-free interest, and there's a distribution. She's a 50% partner. If you think you know, leave me the answer in the comments section below. And remember to like and subscribe because it helps the channel out a lot. And if you need any more help with partnership tax or the CPA reg exam, go to cpaexamtutoring.com and get yourself on I-75, the #1 CPA review supplement, where the right teacher makes all the difference.